Hi guys, Harry Yotis here, professional trader for 20 years. Started my career in 2005 and still alive in 2026. So, in the markets today, Ceasefire Part 2. It's sort of looking like the ceasefire might hold despite some ups and downs. We'll get to that shortly. First, let's talk about the market. Okay. Picture of the S&P 500. We'll start with the market. Okay. Today was a huge day. Follow through. Thursday, April 9th. April looks so far like a great month. We've bypassed all expectations. Huge gap up yesterday, and today, if we bring in the moving averages, the technical picture, we finished even higher. We finished above the 50, consolidated above that, and even above the 100. We're above all moving averages. Okay, so yeah, the technical picture here, guys, obviously bullish. Okay, however, I can't say that yet, okay? Because we are basically still in the chop zone of the past, 6 months. And I just wanted to say that because we've had this destruction of a move now, we might be pulling forward the losses that we usually get during the summertime to now, till like March. So we might be going up. You never know. This could be a very, very strong market. You can't discount the fact that gap up, and if the peace talks happen in the summertime, tomorrow, and it's good, we could get like a gap up move higher before a down move happens. Okay. So yeah, the technical picture for me is neutral. I'm waiting till we get above the highs to get very, very bullish because we're still in the chop zone. However, it's looking very, very good. Okay. And guys, stick to the end of the video because it's towards the end that I give the ideas of what I think is going to happen in the future and my positions and how I would approach it. Okay. But as of right now, the technical picture, we'll get back to it, is neutral, and we paired with a sentiment. Sentiment is still at fear. We have plenty of time to go higher, plenty of room to go higher. Everything is extreme fear or fear. Okay. So this is very, very good for us. Everybody here, we were saying that this cutting below the 653 on SPY could be a bear trap. It looks like it is. It cut below with extreme negative sentiment. It could be a bear trap. Okay. And so, yeah, you will have that. And always on Thursday, I have my favorite sentiment indicator, AAII. And we have the bears retreating a bit. Okay, well, no, for the week that ends April 8th, which is this Thursday, the bulls are coming in, although still below average. The average is 37.5. They're at 35.7. But the bears are still pretty high at 43. We want to see them much, much lower. So again, it's telling us the same thing as the fear and greed index. Yes, we're approaching fear. We're out of extreme fear. We were as low as 10. I think we went to single digits, 9 or 8. Crazy. And now we have plenty of room to go much higher. This is the most hated bull market I've ever seen in my life. We've literally seen multiple weeks in the extreme fear or fear category, and not even 3 days in greed, let alone extreme greed, not even 1 day in extreme greed. Okay, it shows you that this entire bull market here is riding a wall of worry. Okay, so we had that. We have the sentiment is clearly on our side, meaning that we are contrarian when it comes to sentiment. So we're still, it's buttresses our overall bullishness, and yeah, the technicals coming up with us. Okay, so we did have a couple of macro prints. We had initial claims on Thursday, 219 versus 203, still very anemic. Guys, I keep saying, under the hood, we have positive macro. Okay, jobs are holding up. We had a great jobs number. We had, remember, we had a couple of days ago the ISM manufacturing in expansion for 3 months in a row. Very, very rare. Okay, so here, initial claims, another good print. 218,000 is nothing, or 219,000 for April is nothing. Okay, so what else do we add? We also had the PCE inflation, core PCE, which is what the Fed looks at, 0.4%. Yes, it's high, but it's exactly what they expect. They expected 0.4%. So no real damage here, although we have to keep a look out for inflation. However, I think inflation is an oil story, and the oil story is looking bad, meaning good if you're a market long like we are. Okay, so let's talk about the ceasefire. Okay, the ceasefire is big. The big news here is that the U.S. extends the relief rally on hopes that the U.S.-Iran ceasefire will stick. We think so too. And we had some news from Zero Hedge, more Iran truce optimism. Israel to open ceasefire negotiations. Remember, we talked about yesterday that pretty much Iran and the States both are exhausted of this war. They both want to out, and the only person holding back is Israel. Israel wants to keep on fighting and keep sabotaging the talks. But now even Netanyahu, after huge pressure, wants to open up to ceasefire negotiations with Lebanon. Okay, this is big. Maybe Bibi doesn't want to do it, but the pressure in the world, like we said yesterday, the two most hated leaders are Bibi, 1, and Trump, 2. And there's just too much pressure. Even Bibi's feeling it even at home. A lot of Israelis don't want this war. Okay, it's you're seeing some discontent in the Knesset over this war, even with Lebanon. Okay, it's not going as smoothly as they thought. So we have all of these factors telling us that the ceasefire could be very, very sticky. It might stick. It might actually work. So to me, like, my conclusion is, I think that we've basically, at this point, without sounding maybe a little bit too Nostradamus-y, I think that we have jumped the shark on this war. I think everybody's fatigued. We have war fatigue. Everybody wants this to end. It's not very popular. Gas prices are high in the States. Nobody wants it to continue. Bibi might want it, but the pressure is so much that even he is caving in. So I think we have jumped the shark in this game. Okay. However, if we look at oil as our benchmark, it still hasn't cracked. Okay. People are still, the positioning in oil is still very, very long. And look, the uptrend hasn't been broken. Okay. We can bring in the moving averages. Yes, we closed below the 20 and that you should get out if you bought here. But the point is that it's still sticking around. People still think it's not going to work out. Something's going to happen to sabotage it. But I think we've jumped the shark. I think eventually, as this meeting happens tomorrow on Friday in Pakistan with J.D. Vance and the Iranian delegation, I think you're going to see oil really, really tank after that because there is an abundance of oil. We're going to go back to our negative sentiment because the world is awash with oil. Okay? So, yes, it's not going to be pretty. It's not going to be like a straight move down. We're going to get some hiccups along the way, but I think we continue to go down. And this is why in the SPY here, let's move out of these moving averages. Here's what I've been doing, okay? Here, I took a little bit, as I mentioned it a couple of days ago, which was on Tuesday the 7th. Before the announcement, I took some short positions, okay? I took some short positions, but don't get it twisted. I am net long, okay? I just thought here as a hedge, I should take some shorts in case we go back down before going up again. Little did I know, in case Trump started a war, an existential war on the 8th, but he didn't. So here today, I also initiated a short position. What I did was maybe I could write it here. I shorted a call and I bought another call here. This is shorting a call spread, the 680, 685 call spread here, because I think we're going to hit resistance and we're getting to be very much, very, very stretched. This is a huge move. The V bottom, this is like catching a lot of shorts. This is a squeeze from hell. Okay. Now, there is a situation where if the good news happens, we can like gap up and then slowly drift higher into new highs. We can do that without much resistance. Maybe we hit this level and we bounce back even before hitting the 675. Okay, it could be very, very bullish. Or we hit the highs, the new highs, go back down, hit the 684 before going up. Okay, that could be a very, very bullish scenario. We don't talk about that because we're already long, and that's going to be amazing for us. So yeah, we don't really factor in the best case scenario. We look at the worst case. Okay, so we could right now we could hit this, go back down. Okay, this is a huge gap. Will it get covered if bad news happens and the people start retrenching and the people involved? I mean, like Israel, the States really wants to attack Iran and Iran really wants to attack back. We're going to close this gap. If not, we can have a gap and then go without this gap being filled. Okay, that's the solid case. Okay, but here I entered another short, but I'm overwhelmingly long. I just think that short term we might be able to go down because we are so stretched. We see everything. The RSI even, it's a big move. I mean, it could even go higher, the RSI. We're not completely out, and we're not even positive on the MACD. It's the PPO, but it's MACD. We're not even in the positive territory. So we could go, and I could be losing money on my small short positions that I took. But I don't care. If that happens, I'll be very, very happy. My longs will print. So that's what I'm doing. I'm taking preventative short positions and tactical too. I think it might go down. Okay, so I'm going to close it real quick. It's going to be very, very short term if it goes down, because I still think that if we do go down, we have a higher low scenario before going up. I just don't know where that higher low will be. Okay, so that's what I'm looking forward. And I really think that oil is it's the last man standing, holding the line. Once this breaks, I think it's over. Once it breaks lower, it's over. I don't think we see the 116 or 120 highs in US WTI crude anytime soon. Okay, I really think it comes down. I really think the war fatigue sets in, but it's not yet priced into the oil market. I just think it happens. This is the last soldier standing. Okay, so those are my thoughts. Those are my moves, and that is my positioning going forward. And let's see Friday. Friday was the big day. Okay, the big day. The big negotiations are going to happen. All right, guys. Talk to you soon.